Hey, good afternoon, everyone. This is Roberto Espejo with Stone Cold Forex here on School for Technical Analysis, Google Hangout. Thank you for joining us. Today, we're going to go ahead and review the 4-hour chart on the SPX500 4-hour that we went ahead and looked at yesterday to update and sort of magnify the consolidation on the monthly chart that we were seeing. Although it was pushing to all-time highs, we still see we wanted to identify that on a smaller time frame, and we can see here this currently is in an uptrend, which we were looking to see if it was going to break this support or not overnight or today, which it has. We have the break here, retest again, and still currently the same, retesting that resistance line now, what used to be support. So this 4-hour candle here will close at 5 o'clock. So at 5 o'clock, if it closes above that level, 5, 9, or 1 a.m., any of those times, it would invalidate the signal of a change in trend and that the market is back within the uptrend, and they continue higher and possibly hit that possible decompletion at 2140 that we've been awaiting. But certainly with a much bigger projection on the monthly, that has already triggered. So any opportunity to take a short, we will go ahead and take that shot, presumably if you believe that the market is peaking right now. So not much to update here, apart from maybe magnifying now this on a smaller chart, but perhaps we could do that tomorrow. I just want to quickly go ahead and look at now the current Forex chart of the day, the USD yen, Japanese yen, on this 8-hour bid chart. And we can see here in a similar situation as some of the metals that we were looking at yesterday. We put this on ask. You can see that this here, we had a break, didn't have the retest, so perhaps what used to be resistance maybe support here in the market, and this might be tested again. We still have this support level here as well. This would be a good sign if we get a break here, so it can hit our target too, which would be very nice. Let me go ahead and scratch this. Just see something here that it's an old triangle apparently. If you guys care about old stuff like that. Okay, and we can see here from this XA swing here, this is the lowest point after this high. There's no other X. This is the most recent and extreme because we have this lower low that's lower than here. So none of the previous highs will be valid for an XA swing to use for a butterfly or a Bartley pattern. So this most recent X, as well as our extreme X, is at 1272. We had a nice little touch there. It looks like we're getting some exhaustion. This wick pretty close, about 50-50 between the length of the wick and the actual size of the body. So this price movement is roughly, let's lock that in there, 67.5. Okay, 67.5 pips. Wick to where price is now 42. So more than 50% of this candle is wick. So this could be an inverted hammer, which would be a good sign if you did have the opportunity to get into this sell pattern here. If you guys are not following us yet, please follow us on Instagram, Twitter, for start of the day. You can see here we have all of the moving averages here, but the 8. Definitely, whenever you do have all 4 of these moving averages, the 8, 20, 50, and 200 all together with price, that's typically a pretty big change in price that you may see. So if the dynamic has been bullish right here, and we get any bearish movement as far as how the candles hit those moving averages with all 4 of them in the one spot. Obviously, we don't trade based off those things. It's just things that we want to look out for as far as price action. Okay, everyone, today's a little bit shorter of a presentation. I just want to go over a few things, and perhaps we have a lot more to talk about tomorrow. Thank you for joining me. Have a great day.